Hey everyone, welcome to Asphalt Kingdom, right here with Scott Carothers, and we are speaking about numbers to watch. Scott, welcome to the webinar. Thank you so much for being here. I know we're going to deliver tremendous value.
Thanks for having me, Judd. It's great to be here and be a part of this process with you.
Thank you so much. Scott, can you tell everybody a little bit about yourself and your company, just so we do a nice little introduction so people know we're going to give a power bang punch of value here?
Sure. Yeah, I've got a company called Foolproof Bookkeeping. We're based in Ontario, Canada, but everything's virtual, and that's how we work these days. So we can take on clients from anywhere. But I've been working in finance, worked as a VP of finance for a company, sort of a mid-sized company here that had 10 companies under its umbrella, and that's kind of where I got my start in it. And then decided that it would be a great opportunity for me to branch out on my own and do this kind of work full time, because I really enjoy it. I know that a lot of people don't like crunching the numbers and don't like the spreadsheets and all that stuff, but I really enjoy it. For me, it's invigorating. So, our goal is to bring on clients who are invested in their business and want to see their business succeed and improve and grow. And then we provide clear, accurate data and clear metrics and help support them in that growth.
That's awesome, Scott. It's interesting in business, a lot of people end up, getting into the fog and not really understanding numbers and the importance of them, data. And a lot of people shoot from the hip. They set goals for themselves, and then they don't really have the roadmap or the necessary information to really make some assessments and judgments for their business to follow a navigational path that gets them to their destination in a structured fashion. And so with that being said, I really would love to ask a few questions, if possible, that hopefully we can get answered and people can take some really great takeaways here.
Yeah, that sounds great to me. I mean, I'll do what I can. Obviously, we're not going to cover everything. It's like you said, data is a big pool, and it's easy to get lost in it. It's hard to stay focused, I would say.
Absolutely. And I think that there's some answers here coming right about now. So let's go with question number one. What is the number one mistake that you're seeing contractors make?
Well, for me, because of the work that I do, the number one mistake I see with contractors is understanding cash flow. Cash that is actually currently available to them versus cash that will be available to them in the future. One of the big traps that you hear about a lot and that I see a lot is, a contractor using the deposit from the next job to pay off expenses from the last job. And obviously that's a horrible situation to get into, and it's easy to slide down if that's what you're doing. But the bank account is part of the picture. It's not the whole picture. And this is what I see a lot, especially with people who have sole proprietorships set up as opposed to maybe an incorporated business, because a lot of people with sole proprietorships will just have one bank account because, when it's time to pay the tax man, it's personal income anyway. So it kind of is all of your money, but it makes it difficult. So the first thing I suggest when I see that is that you open up two more bank accounts. You got a checking account for your day-to-day business expenses, and you open up a savings account where you move money for sales tax that might need to be remitted, income tax that's going to be remitted either monthly, quarterly, or at the end of the year, depending on where you live and how much money you make. And then you pay yourself. Like I understand with sole proprietorships, the money you make at the end of the year is all taxed as personal income, but it gives your business an opportunity to be profitable. So you figure out how much money you need to make if you were earning a wage, and you pay yourself, out of that business day-to-day checking account, and leave some money in there. Let the business be profitable. And this gives you a good distinction between how your business is actually performing versus just, running money out of your bank account. When I get new clients, it's not usually because their books are clean or things are going well. It's usually because they need help and something has happened. I see a lot of people who kind of come in at the end of the year, and it's like, didn't account for their taxes and how much they have to remit, and they didn't set the money aside, and all of a sudden, you got to choose between, paying your taxes and paying your mortgage. It's an easy choice for most people, but it's a bad choice. So understanding how your cash flow is actually working and being able to plan and make choices for your business around that is a fundamental thing. And it's something that I see go wrong all the time.
What an incredible answer. I mean, everyone, I got to tell you, I look back at when I first started in the asphalt maintenance world and the industry, and it was scary. It was really scary because I didn't understand my numbers, my cash flow. I had no clue about really where I was. I was living day to day. There was no real planning or forecasting. And of course, a lot of us in the asphalt maintenance industry, we're a seasonal business. And so we go through this spring, summer, fall, and we've got this long winter that we have to go through. And unfortunately, a lot of the time we haven't figured out how to prepare for that. And so, you say, we're going to pay the mortgage for sure. The tax man at the end of the day, if you're always having to look over your shoulder and have that negative energy, that feeling of knowing that you haven't prepared and planned for that, not understanding your cash flow, that can be like an anchor with a shackle attached to your ankle that you're trying to drag along. And so understanding the cash flow, wow, what a great answer. Thank you, Scott. Question number 2, business is absolutely booming in the asphalt maintenance industry right now. This year, it's unbelievable to watch the search intent in the search engines. It's unbelievable to watch the number of people starting their very own business. What should contractors do to prepare for the future? Should they be saving, or should they be spending or investing?
Yeah, I mean, that's a great question. We've seen that COVID has done wonders for some industries. Anything around home improvement, anything around the home is booming, and anything related to social gathering and travel obviously is bottomed out. So you have to expect that some type of correction is coming. People who are spending money on their house, last year, this year, maybe are going to go on vacation next year and not spend that money. So there's difficult decisions ahead for people, especially contractors, people who are booming right now. I'd say you have to ask yourself a couple of key questions. One is, do you have any tangible avenues to growth currently? I don't just mean, do you think you can get more clients if you had more staff and more equipment? I mean, are you turning people away? Are you actively turning away good leads, good clients? Do you have tangible ways that you could grow right now if you just had the tools that you need? And then the second part of that is your business financially stable? Do you understand your balance sheet? Do you actually understand where your business is at right now and what that growth is going to do to you? Because the start of growth and the start of investment is a big hit to your cash. And this goes back to what we were saying earlier about cash flow and understanding that cash management. So if you can answer yes to both of those, if you've got tangible avenues to growth and your business is financially stable, you've got a reserve, you know what's going on with your cash flow, then go for it. It's a great time to grow. You've got opportunities right now, and it'll set you up for bigger success in the future. If your answer to either of those questions is no, or I don't know, then you should sock that money away. You should save it. You should build a reserve and start thinking about it and start making an active plan for growth. Make a trajectory for what do you want out of your company. Are you just trying to make enough money to pay your mortgage and set something aside for your retirement? Are you trying to grow? Are you trying to build a team? Are you trying to get yourself fully out of operations and manage a company? It all comes down to the individual choice. But if you're going to invest in growth, you need to know that it can succeed, that it's likely to succeed if you put in the work. If you're, as you said earlier, if you're winging it, if you're shooting from the hip, it's dicey, because next year's probably not going to be as good as this year was.
Totally agree. And it's interesting. So I'm currently consulting quite a few asphalt maintenance contractors that own their own asphalt maintenance businesses. And one of the things that they're saying, Judd, there's this tsunami of business that's coming in right now. And I don't have the capacity with our equipment and our staff to be able to do all the work that's flowing in. And so what I said was, well, guys, you know, what you should be doing is considering not just pushing away those leads, but you should be considering collaborating with other contractors that you might be able to sub in to do the work, and creating some really strategic partnerships to be able to get the work done while it's flowing in at this high level. Essentially, you could become a pavement broker almost, if you will, right? You're a sales agent, marketing sales agent that essentially is able to advertise at even higher levels than you're doing right now, if you have the connections and resources through your partnerships to be able to fulfill the services. So it's an interesting thing. Save or spend right now. I wouldn't recommend that asphalt maintenance business owners just do the work that they're capable of doing. What I would do is step up the average job value and really look at doing the bigger size jobs that can allow them to hit their revenue goal faster, and then sub out the work on the other side. So when I say spend, I mean invest into more advertising, invest into some more Google AdWords, some Facebook ads, etc. If you're uncomfortable with doing that, either learn how to do it or save the money and not do it at all, right? Be comfortable with where you're at. So you're either going in as an investor, or you're going in as somebody who just wants the security of doing what you're doing every day right now and pushing away that work, right?
Yeah, and that's a great approach. I mean, if you've got friends and colleagues in the industry and you can farm out some work and make a little bit of money on top of it, I mean, that's a great approach.
Social media today, I mean, there's Facebook groups that have, you know, like USA Seal Coaters that we have over there. We've got 1,600 members over there. And I mean, there's business owners spread throughout North America in that group. What a great opportunity to create some great connections and to be able to really work together, invest money, make more money, and ultimately grow. You know, it's in today's 2021 age, we shouldn't just be limited to our local geo point. We should be able to expand beyond that and continue to develop an industry and improve it. That's great. Question number 3 for you, Scott. What do people misunderstand generally about cash flow and cash availability?
I think this, the main thing that I see is that people look at their bank account and they think that's their cash flow, and that's not correct. There's money going out, there's money coming in. If you're a contractor, you probably are owed money, so you have receivables. Depending on what type of terms you have with your vendors, maybe you've got payables as well. Maybe you're good at actually managing a credit card and you're not paying interest on it. You're using a credit card to give yourself 30-day terms with vendors. So your cash in and cash out is the big thing with cash flow. And a lot of people I see just look at their bank account. And, you know, if you've been in business long enough, then you probably have an idea where I get a lot of small business owners and contractors that say, well, as long as I keep this threshold or whatever it is in my bank account, I know I'll be okay. I know things aren't going to bounce. I know I'm going to make my payments and all that kind of stuff. But what you're missing is that if you understand your financials and you have clear, accurate, current, up-to-date financials, you're not just taking a shoebox full of stuff to an accountant once a year. If you're actually on top of what's going on in your business, then most businesses have more money to leverage in their business somewhere than they realize. You can shorten receivables, you can extend payables, you can take a look at your inventory, you can look for bulk buying discounts or running a just-in-time process, which is a little risky, granted, in today's climate with the shipping issues that we've had globally. But depending on what product you're looking at, that's something you can explore. There's one thing I find with cash flow and cash flow management is that people often don't look at the big picture of their business when they're thinking about cash flow. They think about cash flow as this immediate, short-term, near-term thing, and it's not. Cash flow is the lifeblood of every company that exists in the world, and the great companies like Coca-Cola, that Warren Buffett loves so much, these companies are great at managing their cash flow, and that's a big part of the reason that they continue to be successful and can continue to innovate and can continue to grow and expand. And you can do the same thing on a small scale as an independent contractor, as a small business. If you understand the big picture of your cash flow, you just open up more opportunities for yourself. You give yourself chances that you wouldn't have if your focus is day to day, week to week, how much money is in my bank account. It's, unless your bank account gets to zero, it's essentially irrelevant how much money is in there, as long as you're managing your cash flow properly. And I use separate spreadsheets for all my clients for cash flow management, just to show them and just to track. If you are still writing checks, if you haven't found your way to electronic payments, fully yet, you got outstanding, and you just have to make sure that the money coming in is always more than the money going out.
And are you finding with your clients that you're working with, are you finding that you can give them a clear picture of what they actually have to work with and how their business is improving from a cash flow perspective?
Yeah. That's one of the first things that I always work on is cash flow management, because it's so poorly understood by most people. I occasionally get somebody coming in that really gets it, but most people struggle with it or haven't thought about it in that other frame before. And what we're usually able to find is that if we make a couple tweaks to how the business is operating, you can put more cash in the bank, which gives you opportunities to expand, to buy new equipment, to hire new staff, to do the spends, the marketing spends, the ad spends, whatever you need to be spending money on to grow your business. You might have that money currently in your business, just not in your bank account.
So interesting. It's the real money that actually exists to be able to work with. Yeah. It's very interesting. And do you with today, with in today's day and age, there's accounting platforms, of course, QuickBooks and Xero, and a variety of platforms. Do you find that you work with your clients? Do they input the data or information into those platforms that you then analyze, review, and assist with direction, or how do you generally work with your clients?
What I've found the most effective is that we input the data. So there's lots of software out there. We use a platform called Dext, and it's just an electronic upload. You take a picture of your receipt or your invoice, and it uploads electronically, attaches to your QuickBooks or Xero profile, and so you can always see everything. But we are able to classify things more appropriately. What I found with clients who like to do their own books is that, that once a quarter or once a year, when you look at them, there's a bunch of problems and a bunch of things that are misclassified and a bunch of errors, and you've got to go back and correct stuff. And so the picture that they're getting, that they're looking at on a week to week or month to month basis isn't accurate, and it's not giving them the opportunities that they could have to leverage their business. So for us, it's best if we enter the data. That's all we do with clients now. I've got a couple of close friends where I still kind of mess around with their books for them and help them out. But any new client that comes on, we do the data entry and the analysis on top of that, because then I know the analysis is correct and is being done with accurate information.
That's such an important point, is that, and I really want to make this to everybody, is that, you really want to be working in the area that you're really happy working in, so to speak. You want to focus on the things that you're really good at. I suck with numbers, totally suck with numbers, but I love to market. I love to sell. I love to go and do jobs and see the finished product and see customers smiling. I love to do that, and that's my strength. So I want to focus in on my strengths, and I want to unload my weaknesses to professionals like yourself to be able to really deal with that stuff. But I don't want it to be complex for me to be able to deliver the information to you. I want it to be easy. I want it to be a smooth process. And I think that's the thing that a lot of people are worried or scared about, is that when I end up working with, somebody who's going to watch my numbers, if I'm going to work with an account, I want to make sure that the relationship is easy and smooth and not complex. And I want to be able to have a report come back to me where I can do a Zoom call, or I can go over the phone, go via phone and go over the numbers. And I want to be able to understand the dashboard, if you will, of my business from a financial perspective. Do you find that you're able to do that with your clients?
Yeah, that's ideally how we set everything up. So we just use various pieces of software that integrate with each other to make life easy. I mentioned the one piece of software, you just take a picture of things and that's it. You can throw out the paper afterwards. We use some other software for electronic payments. So, you're not giving away signing authority, but you just have to click your mouse a couple times and issue payments once they've been cleared and things like that. I've got a meeting this afternoon with a client where we're going to review with this client, we review things monthly because they want to stay on top of it. And it's obviously a turbulent time. I live in Canada. Things are still kind of up and down here. Yeah, it's all about, I agree with you, how easy it is to interact with somebody like me or somebody who's doing your marketing or whatever it is that you don't like to do. It has to be simple. It has to be straightforward. And then for me, when we're talking about numbers, it's what are the metrics that are important to you? What are the key performance indicators that you're focused on? What is it you're trying to achieve in your business? And then we'll tailor those reports. We'll customize them to you to make sure that you're getting the information that you need that's important and relevant.
Love it. Love it. That's awesome, man. And I'm excited about that. I'm really excited about that because it almost soothes the mind. Again, I don't like numbers. So when I hear that, it's like some relief, right? Question 4, what is the difference between a balance sheet and a profit and loss statement? And do you know how to truly need to know, do you need to know how to read both? That's something I'll tell you, man, like balance sheets and a profit and loss statement. I'm like, huh. What, how, when, where?
Yeah, I get this a lot. It takes me back. The first business that I was ever involved in on an ownership level was a health food store, and I was just coming out of university. I'd been working there, and the owner, the current owner, brought me in as a minority partner with sweat equity, which turned out in the end to not be a great deal for me, but it was a great learning experience. And I remember she used to sit me down, once a year, we'd review the P&L, the profit and loss statement. So right away, that's a flag, once a year we're looking at it as opposed to, monthly or weekly or quarterly or whatever your cycle is. But, and then I said, oh, what's this other statement here that the accounts have sent through this balance sheet? She's like, that doesn't mean anything, just ignore it. And looking back, I find that hilarious because it's a very important document. Everybody recognizes a profit and loss statement. It's profit and loss says, here's a period of time, whether you're looking at a week, a month, a quarter, a fiscal year, whatever it is. And here's our revenue versus our expenses. Whatever's left over at the bottom is profit or loss. That's pretty straightforward. And that's what most business owners look at and use on a regular basis. And you should, because that's the one that's changing every single day. Every day you've got revenue coming in or expenses going out or both. So that statement changes constantly, and it represents a period of time. So you can compare this month to your previous month or this month to the same month last year. A balance sheet is a snapshot of the financial health of your business at a given point in time. So that could be the last day of a month, the last day of a quarter, the last day of your fiscal year. And you can compare them to that same point in time previously. So if we're talking about fiscal years, let's say it's December 31st. So December 31st, 2020, and then compare that to December 31st, 2019, get a snapshot of the overall health of your business. So I like to try and emphasize the importance of a balance sheet by saying a profit and loss statement can be very long. You could have, for a very simple business, maybe 20 lines on it. For an average sort of business, you could have 40 lines on it. For a bigger business, multiple pages, multiple pages. And all of that boils down to one single line on the balance sheet. And that's right at the very end as profit for the year. And then the balance sheet, everything else on there is stuff that carries forward from year over year. It doesn't get zeroed out. So this is where you see how much cash you have on hand. This is where you see how much money is owed to you, things that you've prepaid for. This is where you see the value of your investments in equipment and infrastructure, the value of your inventory. It's also where you see your debts, money that you owe, your payables, your credit card, taxes that you owe, short-term debts, long-term debts. And then the remainder of that is your equity section, is how much money is yours as the owner. Is what value have you created in the business? And so when we look back to what I was mentioning earlier about should you save or should you invest right now, the balance sheet is the statement that's going to tell you if you've got a viable business that can grow. If you have a strong business financially right now, you might be making a lot of money this year, but if you've lost money for 2 or 3 years in a row before that, you might not be in a position to expand. And your balance sheet will tell you that. You might have a lot of debt on there that you need to clear off, and it's a good time to clear that debt off, especially if you got it when interest rates are high and now rates are low, and you can swap things out because you have profit. Maybe I'm getting a little carried away here and going a little too far with it, but you don't need to be an expert in finance, but you need to have somebody who is an expert who can boil it down for you and tell you what's relevant to your business related to the balance sheet. And you should at least have a base understanding of how to read a balance sheet and what it means.
And you're able to give the balance sheet and the profit and loss statement to your clients, and you're able to explain that in depth.
Yeah, what I do is generally through Zoom, and I'll do a screen share and we'll walk through it, and I'll pull out comparisons, things that have changed from one period to the next. And then it depends on the goals and incentives and motivations of the business owner, what's important to them. And then we'll analyze what we could change in the business, what little tweaks or adaptations we can make to improve things for them.
Man, this is wonderful. I'm picturing myself on a ship and owning the ship and heading out sailing on the ocean and hoping that I have an incredible crew and team with me that can get me there. And each person on that ship is responsible for a certain tactic to be able to improve the performance of the way that sails to the destination. And I have no problem investing into good crew to help improve the direction of the ship. That's for sure. Amazing. That's an analogy, everybody, but certainly I can tell you, with the teams that we've developed in our company, I hire strength to bring to my company to help improve the direction of the company. That's an investment. That's not a spend. Last question for you, Scott. What do you see most successful contractors, what do you see them have most in common?
Yeah, that's a great question. And something that we've touched on and that you've touched on, and it relates back to your ship analogy there, is recognizing what you're not great at. I mean, anybody that starts a business should be an expert or should at least become an expert in whatever it is you do. So with a lot of your clients, asphalt, maintenance and doing that kind of work, I won't pretend I understand it, but being able to execute it, you have to at least be good at that, and then recognize what you're not good at. Are you not good at filling your pipeline with clients? Are you not good at closing deals? Are you not good at overall marketing? Are you not good at your finances and bookkeeping? Are you not good at hiring? Are you not? And then find people who are good at that and let them do that work, and find people who can make you understand it in a way that is relevant for you. That's what I see happen with all successful people. It's when people try and do too much, when people try and do things they're not good at. Of course, you can learn how to do things, but is that what you want to spend your time doing? Is that the effective use of your time? If you've already taught yourself how to be an expert in what it is that you're focused on and that drives your business, what's the point of starting at square one with something you don't understand and trying to learn it? It might be something fun for you to do, and it might be something you enjoy doing. So do it on the side. And when you get great at it, then take it over again. But if you're not good at it now, focus on what you're good at and hire out the rest.
It's such an incredible piece of advice for every business. This isn't only in the asphalt world. This is every business. That's such an important piece of advice. And I think one of the things that business owners get, especially in small business, they get really concerned about is the cost associated with bringing in somebody who's an expert to do that. And so I'd like to give this, and maybe you can chime in on this. I mean, you don't have to hire somebody that's on a full-time salary to do these pieces. You could literally have some contract work where you have somebody come in on a very part-time basis or on a consultancy basis and that can be built into your financial model as well. Do you agree?
Yeah, absolutely. And I think that's the approach that most people should take most of the time. Until you grow to a point where you find you need somebody doing that job full time. There's lots of great contractors out there, and lots of people, especially now, and in the last sort of 18 months, things have changed a lot in terms of the gig economy and what people are doing. And there's a lot of talent available out there that you can hire, by the job, by the hour, whatever you need.
Amazing. Well, Scott, I want to say thank you so much for being a part of this awesome session, and you've delivered such incredible value. Numbers to watch. Now, Scott, if people that are watching this want to get in touch with you regarding potentially working with you, are you taking on new clients at this time?
Yeah, I'm kind of always taking on new clients. It's part of the growth model of my company that's been built in. So I appreciate the shout out, Judd. That's great.
Sure.
If you want to get in touch with me, just go to the website. There's a contact form on there. It comes right to my email, and I'll reach out right away.
Right on. Well, we'll have contact information that will go along with this video for you, Scott, and we will definitely be in touch, and looking forward to maybe doing a 2.0 session as we move towards the middle of the summer or towards the fall, in reviewing and reflecting on the numbers that we've seen throughout the season. Appreciate you tuning in with us, everybody. Scott, thank you so much, man. I appreciate everything.
Thanks, Judd.
Take care.
Bye.